Hello guys, so in today's video I'm going to share with you guys how you can catch spikes on boom and crash indices with a very powerful strategy that is very accurate. Okay, very accurate strategy on how to catch spikes on boom and crash indices. All right, so now first and foremost we're going to start on boom 1000 index. I'm going to share with you guys the parameters on how you can go about this trade. All right, and I'm also going to show you that this strategy really works. So first and foremost we're going to over the indicator section, whereby we put on the moving average on the main window. You put on period 35, shift 0. Method is going to be linear weighted, then you apply to close. All right, for the style you put it on 3 pixels, then you use this first trend line right here, then you click on done. All right, you want to make sure that you apply to close. Then for the indicator window 1, you put on average directional movement index. You put on period, the period you put on 92, the levels you put on 91 and 9. All right, then the style you put it on 3 pixel, then you put it on this first trend line, then you click on done. Then for the time frames, it's going to be on all time frame. Then the style right here, you put out on the color of your screen, which is white. So if you are using white background, you put the color on white. If you are using dark background, you put the color on dark, right? Then for plus di, you put that on 3 pixels. You use the color blue. Then for minus di, you put that on red color with 3 pixels, right here. Then you put that on the first trend line, then you click on done. All right, now the third indicator, we're going to use the moving average. The moving average on period 5, shift 0. All right, then the method you're going to put that on simple. The style you put that on 3 pixel color red with this first trend line. All right, then after that you click on done. All right, so now that we are back to the chart, now as you can see right here, we know that this is a highly volatile market, so we will want to always look for a better opportunity whereby we want the spike to happen. All right, so when you're trying to catch spike on boom and crash, you want to make sure that you look for that opportunity whereby the chances of the spikes coming into the market is very high, right? So now let's get on with it. Now currently we're seeing two levels here on the main window. At this very point we're seeing two levels, one level 91, then the other one is level of 9, right? At this point, this indicator section, so we're going to be taking our buys because we're trying to catch spikes. So we're going to be taking our buys at the oversold when this this line right here, this moving average, at this very point, this is a moving average. When it crosses below this very point, then you look for a buy opportunity. Now you can take your buy immediately after this line right here, this moving average crosses above. Remember, the moving average need to cross below the level of 9. The one is above that level, then you go in for a buy. Now you are trying to catch a spike. Remember that this market can still sell for a certain amount of time before the spikes happen, so you're going to make sure that you have a little bit of patience on the market. All right, when you see that this first spike comes in, you can also take the spike immediately it crosses above this point, this level of 9. You can buy the market and wait for the spike, but sometimes it might take a little bit of time before that spikes happen. That's why I said you should wait until the spike happens. When it crosses above the level of 9, then you go in for a buy. When you go in for that buy opportunity, your market is going to be selling for a particular period of time, but you should be rest assured that the market will still buy. Okay, you don't need to be really too scared of the market. The market is still going to buy from that point because the market have got into the oversold position. I will know that when the market gets to that certain point, it tends to reverse upwards. All right, now after it have sold for a very long period of time, they look for that buy opportunity. All right, so as you can see right here, at this very point, the market just bought right now. Take a look, the market just bought. You can see at this very moment the market spiked upwards the level of 9, and after it spiked at this very point, it sold for a little bit of time. Then there was another spike again, and we are still going to experience another spike. Now, first of all, let me go over to the higher time frame, like the 1 hour time frame. Now, what am I seeing here on the higher time frame? I'm seeing that this market is going towards the downward trend. The market have bought for a certain amount of time, but it's going towards the downward trend. Now, this does not mean that this market won't spike. Remember that on the 1 minute time frame, the market moves faster and quickly than the higher time frame. So I've seen that the market have sold for a certain amount of time, so there's a chance that this market will also buy a little bit. I will know that that little bit of buy is what we need, that spike. So we'll go over to the 1 minute time frame again, and we'll look for another opportunity. All right, we'll place a buy at this very point. If I zoom out of the market, you can see that this is the 1 minute time frame, and the market have been selling for a very long period of time. So there is no way that this market will continue to sell continuously without giving a spike. Even if just a little spike is just going to come. So what you need is that short spike entry. You need to cash that spike and make that profit. So you are looking for a perfect opportunity. So at this very moment whereby the moving average crossed below this level of 9, you can go in and place your buy just to catch that spike. Remember that patience plays a very, very big role in catching spikes on boom and crash indices. All right, you can set your stop loss to about 5 to 10 candlesticks, right? 5 to 10 sell candlesticks. Remember that when you are buying this market, the market is going to be selling. So what you should do is that when the market is selling for a certain amount of time, you should be cutting those candlesticks, and when it gets to about 10 or 15 candlesticks, then you can set that as your stop loss. All right, I want to show you guys that this strategy works perfectly. Let me show you guys. You can see at this very moment, you can see at this very point, I took a buy. Let's zoom in a little bit. All right, take a look. At this moment, at this very point, trace it down. I took a buy because I know that this moving average I've gotten to this very point below the level of 90, but I took a buy early because I don't want to miss the spike. If you take a look, the market have been selling for a very long period of time, so I knew that the spike should come in because this market have been selling for very too long, and it has to buy, right? It has to buy. So immediately I saw that this market is going towards this position, I immediately entered into this market for a buy. And you can take a look at this very moment, immediately it spiked upwards. It gave me a very long spike at this very point, but not only that, it continued again to spike upwards. You can see, and even when it sold, it still spiked again, and I took profit at this point. I bought at this point, I exited at this point, I took profit. Take a look at this point as well. I bought here, I took profit here. All right, I needed that first spike. All right, so you see that the strategy works perfectly. So I just share with you guys right now that this strategy works. So I'll go over to the crash market and show you how you'll be able to catch spikes during the sell entry. So remember that it's going to be the opposite. All right, when the moving average crosses above the level of 91, at this very moment you look for your spike, or you wait until it crosses below. After it has crossed above the level of 91, then you can wait until it crosses below the level of 91. Then there you go, the market starts to spike from that very point. You see that even after that, after this spike, the market went in again for a buy. Then there was a very long sell. You can see how perfect this strategy works. Very good entry. You can see that at this very moment, this is the overbought, and from that point here, it's sold. So you can see it's very, very good strategy. So at this point, the market has been buying for a very long period of time, then it sold, it bought again, then it sold. You can see is at the overbought at this very point, and the pressure for the price to drop is really, really high. So you want to look for that high opportunity whereby that there's a chance that this market will spike. That is the only place you want to target always. The only point you want to target always. And there might also be some points where some places whereby the market will show you that there's the spike, the chances might be a bit low, but the spike will also come. Okay, for you to be able to get that properly, you need accurate and proper analysis by going over to the higher time frame to confirm your entries. All right, so I believe after watching this video you understand everything that I've said to you guys. So also guys, join my Telegram community, the Daily Forex on Telegram. On my Telegram community, I share with you guys, free daily, free signals on boom and crash indices. I give you guys perfect opportunity for you to make profits, perfect entries opportunity. All right, so if you found value in this video that I've shared, do us a like and subscribe to the channel, the Daily Forex, for more awesome trading tips and strategies. I'll see you guys on the next video.